Good afternoon, everybody, and welcome to the latest Service Department News webinar. Today, we will be looking at supply and demand in the Service Department sector. My name is George Sell, I'm editor of Service Department News, and we are a multimedia B2B platform for the Service Department, apart hotel, and extended stay sectors. Today's webinar is going to last an hour. We'd like to make it as interactive as we can, so if you have any questions, please do pop them in the chat or the Q&A in Zoom. And a recording of the session will be sent to everybody who is registered via email. When we get to the end of the session at 3 o'clock, we're going to leave the session open for a couple of extra minutes because there's going to be a lot of stuff posted in the chat, lots of links to stories and contacts and things like that. So we'll leave it open for a couple of extra minutes at the end. So just wanted to show some screen grabs from Service Department News and some other media platforms about some of the topics that we're going to be discussing today. So the extended stay pipeline in the US is growing quite healthily among the big hotel brands. But Agency Silverdor is looking at a real strain on supply, that there just aren't enough service departments out there to meet demand. Again, hotel construction pipelines are looking good, but in the US, extended stay ADRs are going up by 30% according to the Highland Group report, due to constrained supply. So we've got a great panel of experts joining us today to talk about this, and I'm going to ask them all to introduce themselves in turn, and we'll go from left to right as we see them on the slide. So first of all, Victoria, good afternoon to you.
Hi, good afternoon. As George said, Victoria Curley. I'm head of commercial at Roomzzz Aparthotel. We are an operator of 11 apart hotels now in the UK. Thanks,
Victoria. And Marie, welcome to you.
Hello, hi, Marie Hickey. I'm a director in Savills. I'm essentially an analyst. I've been tracking hotels and in particular service departments since 2004. And I always have the joke that up until about 2017, no one listened to me when I used to talk about service departments, but that has definitely changed over the last few years.
Yeah, and you are now one of the oracles of the service department sector, because you've been looking into it and writing about it for so long.
Yeah, I wouldn't go that far, but yeah, but as a business, we're very active, both in terms of the operational side and investor side. So we've got a number of quite exciting projects actually ongoing at the moment. So there's definitely lots of appetite, investor appetite for the product.
Great stuff. Good to have you here, Marie. And finally, Thiago, good afternoon to you.
Good afternoon, everyone. Yeah, I'm Thiago Hahn, CEO of QIG Groups, a newly formed investment group for the hospitality sector, mainly focused on the accommodation sector.
All right, thanks very much. Okay, so let's give this a little bit of context and a little bit of background. So in the UK and Europe, we are massively undersupplied with service departments and apart hotels compared with other major markets, the US, Asia, and especially Australia, where the kind of proportion of service departments compared with the whole hotel sector is much, much higher. Marie, why do you think this is historically, and how do you think it's evolving and changing?
The reason, well, yeah, talking about history, I suppose the reason for that, and a couple of years ago, I did this piece of analysis where I looked at the number of service departments, apart hotel units per 1,000 business visitors, just because at that point in time, that's where demand was coming from, was largely corporate. And you did see in the likes of the US, particularly, markets like New York and in Asia, there was much more supply relative to those types of visitors. Now, it's a history. Obviously, in the US, the concept of service departments extended stay originated there, but also I think it's to do with the geographies. You have people on secondments, lengthy business trips over much bigger land masses. So obviously, the ability to sort of pop back home, at weekends or during the week, is more difficult. So obviously, the appeal of staying in a essentially a home away from home, there was definitely more of demand for that. Now, it is changing. We are seeing lots of new supply come in to the European market. We're probably never going to get to the same levels of supply that we've got in the US, more so because the demand is almost outstripping, the supply essentially. And also down to that geography, it's probably not feasible or sensible for us to have the same level of supply that we have in Asia and the US, down to those issues in terms of size of market and geography and travel times.
And I think a lot of the inventory here, particularly in the UK, hasn't been purpose-built service departments historically. It's been just standard residential units that somebody's decided to put into a pool and cater for business travellers, and that's also changing, which is a good thing.
Yeah, very, very much so. I mean, where we're seeing a lot of the growth is actually for branded C1 product, and depends on the the nature of the operator, in terms of the size of the units, but just down to the economics of development, land cost is definitely skewing towards more smaller units, apartment sizes. But it's not a case it's just all super micro apartments. It really does vary from brand to brand, operator to operator.
Yeah, thanks, Marie. Thiago, you've got experience of the sector in quite a lot of areas of the world. You did have a Brazilian arm to your business. You've got an agency arm which deals with which deals globally, presumably. Which markets do you see growing the most in terms of new supply?
I think just because of even the question that you just asked before, I think Europe we see as a huge focus for branded service department operators, branded hotels coming into the market. I think we expect to see a big growth in Europe, UK, right? For that, because there's a big drive in there. In Latin America, which is a market we know very well, that's another market that is growing fast. Obviously, there's a lot of, similar to America, there's a lot of land, there's a lot of new builds, it's much easier and faster to build there. So that's the two areas which we are familiar with, and we see a big growth.
Yeah, okay, thank you. Victoria, we mentioned on the call briefly before we started the session, you're about to open a new property in Edinburgh. Is that a kind of a destination you've always wanted to have a presence in because the demand is so high and supply is lacking?
Yeah, of course. I think obviously we signed on to the programme quite a while ago. We'll be opening in the St James Quarter in Edinburgh in just a couple of months. So it's a really exciting time to be opening in Edinburgh when we look at kind of what STR is forecasting in terms of demand and rate, especially in Edinburgh. And we know that it's an area for apart hotels and serviced apartments. There's a good amount of demand when you look at the balance up of hotel bedrooms to serviced apartment and apart hotel bedrooms, but there's still that demand for more growth. It's a heavily internationally led market. So it's one that we're really excited about the time of how we're joining and the way that the forecast is looking that market's going to continue to grow. Yeah.
And Roomzzz is quite an interesting brand because you do cater to more leisure business than traditional service departments, the short stay apart hotel stuff. So how do you evaluate new cities when you think about potentially putting a flag there? Do you assess the leisure demand as much as you do the corporate demand?
Yeah, of course, it's a balance of both. I think what I will say is our business mix has definitely changed across the pandemic. I think we've definitely now gravitated back more towards that home of what a service department and apart hotel and what our niche really is in what we can cater to. But we absolutely, you're right in saying, still cater to that leisure side as well. I think that's where that kind of leisure market has come in and really found us a nice home of where things go. But we definitely look at both ends of the spectrum. Part of what makes Edinburgh as a new market we're going into so exciting is where that leisure market really takes that destination and how that city has really coined a way to create demand across an entire year, which is obviously appealing as an apart hotel operator. We see that natural benefit if we don't have those occupancy dips that traditional hotel model and traditional leisure model creates. So I think that's really a key focus for us, is finding markets where that demand scope is across 12 months of the year and not an isolated period.
Mm-hmm. We saw on one of the slides earlier that in the US extended stay hotel market, rates had gone up considerably, up by 30% of ADRs because of rising demand and constrained supply. Is that something you're seeing in the market here? Or perhaps not quite so dramatic as that, but
probably not quite so dramatically, but yeah, absolutely, it is something we're seeing. But I think it also plays into the supply side of things quite well, in the sense that we also have to remember there's quite a lot of supply out in the markets to humanitarian aid at the moment, which is in some markets creating this falsified view of what inventory actually is. So some of it is natural growth that we're seeing because of inflation. And it's quite interesting now that STR are starting to report aggregated numbers of what ADRs would be, accounting for that inflation mix as well. So we're still seeing that benefit, absolutely. But I think we're in a time where we're not quite in what this new norm is going to be yet.
Yeah. Okay. Marie, have you got any? Have you done any analysis on how service departments and apart hotels are performing compared with the wider hotel sector? And is this kind of uptick in rates due to constrained supply happening everywhere, or is it more of a localized phenomenon?
I mean, I would say, STR are the masters of this sort of knowledge. So we do obviously use their data and obviously supplement it through, the data we get from specific operators when we're on a particular instruction. I think it is, on average, we're definitely seeing, strong ADR growth. I think what's really interesting about the sector is actually its ability to drive occupancy. So actually, in the case of London, which last year, phenomenal ADR growth, and that meant really healthy RevPAR growth, but actually occupancy full year was still below where it was 2019. However, if you look for London service departments, occupancy is still down, but only marginally down. So that's what's really interesting about the sector. And obviously I was covering it quite a long time ago, but I do remember what happened post GFC. We saw a similar thing. So its ability to weather, external shocks in terms of what happens to the economy. So I think, from an investor perspective, I think it's a really attractive asset class. Yeah.
Well, let's touch on that for a minute then, because the only way we are going to address this imbalance is by building more service departments. So what's your assessment of investor sentiment towards the sector at the moment, when development is difficult, not just in service departments, but across the board?
Yeah, well, when it comes to new development, I mean, obviously, what's happening generally, sentiment is slightly weaker. But I was saying earlier, for the right site, right product, and obviously at the right price, which is absolutely key, there is the appetite for development. I think there's obviously more of a challenge for those schemes that haven't yet started on site, when those site acquisitions happened several years ago, potentially, where the viability is maybe a bit more challenged. But I think for new sites, there's still definitely the appetite, although it's definitely weaker than what we've seen previously. I mean, our view is that, things will improve over the second half of this year. So we do expect to see, more transactions, and as a result, looking then further ahead in terms of those schemes being built out, we'll see, some development actually pick up again in a couple of years.
Mm-hmm. And if you compare investor sentiment for service departments and apart hotels to other asset classes, how would you gauge that? I think it was the last Deloitte investors survey before the pandemic. I think service department was second of all the asset classes that they ranked. And then this year, I think it had fallen at quite a few places to 6th or 7th off the top of my head. Do you think that's reflective of what you're seeing out there?
Yeah, I mean, we're definitely finding appetite and interest, and this goes back to my point when no one really wanted to listen to me about service departments a couple of years ago, and that's changed. I mean, the real appeal for investors for the sector is obviously it's seen this surge in growing awareness amongst consumers and its ability to pivot into corporate and leisure, the average length of stays, and also most importantly at this point in time, it's about the margins. It's about, you know, it's a sector that, you know, enjoys healthier margins on average. Obviously in some cases, and obviously it varies from operator to operator and brand, you know, staff availability is, you don't need as many staff servicing a room. So with rising costs, rising debt costs, it does look very appealing to investors. And we're seeing that, you know, we're on a number of, as investment agents, we're selling a number of service department products, and we have sold quite a few, and the appetite for those assets was, you know, very healthy. But again, some of those were in, you know, great kit in great locations, which also helped.
Yeah, thanks, Marie. Victoria, Roomzzz is part of a wider group, and you are a developer as well as an operator. What opportunities are you seeing for development, and what are the most attractive ones? I think, you know, across real estate in general, we're seeing more of a presumption from the planners now to favour conversions rather than new builds. And I think with the way development finance and so on is at the moment, they're probably more viable than new builds too. Is that reflected in what you're seeing at Roomzzz?
100%. I think a lot of the development projects we're looking at the moment are office buildings, people that have turned over leases throughout the pandemic, that actually in this weird kind of circle kind of even fuels the need for more service departments. So it's fitting quite nicely in how those transitions are potentially working at the moment. But it's definitely a more appealing development opportunity looking at these buildings that are a change of use rather than a new build. And it's much easier to look at those versus, as Marie's already touched on, kind of the cost of build and getting that planning through. It's not as favourable as looking at something that's already an existing opportunity to just change the use of. Yeah,
okay, thank you. Thiago, you've got new investors into your business. What attracted them to the service department sector, and do they have development plans as well, or are you solely going to be an operating platform?
No, certainly. What attracted them to the sector and to invest with us was they are a big real estate investor. You know, they have investments across hotels, residential, commercial, and everything. And as Maria touched on earlier, you know, you can see a lot of the focus shifting into our sector, right? Because there's it's quite a lot of very, not trendy, but it's a good sector to be in. So they invested with us to be involved in the sector in order to be able to invest and buy real estate for the sector. And it's we're a bit different than Victoria, for example. We don't develop, we buy end product, but we are very much in line with the investor sentiment that's been discussed, right? So we are interest rates for us, it's a problem, you know, to make sure the numbers stack up, making sure, you know, you can't, you know, financing is very difficult. So it's a bit difficult at the moment, but I think we're seeing, if you look at the midterm, we're looking that this is going to be a better place for investment in the next 12 months to 18 months.
So can you outline maybe what your plans are for adding inventory over the next year and 18 months? Have you got acquisition targets in mind already? Are you looking at active deals? Yeah, we have.
We have a very service department, corporate housing business, let's just say the traditional service department. And we are actually moving more towards even going a bit more corporate housing, right? So 100% mid-term operator, so 30 nights, 1 month plus, so more of a flexible monthly stays than actually service departments for short stays. So we are focusing on adding inventory in London it's our primary focus, and we are adding New York as the first step into the US. But it is less of a drastic growth when you are on the hotel or the apart hotel sector. It's more of a steady supply around the right areas of each of those cities, because it's where people want to stay for 3 months, 6 months. So that's where we are focusing on in the next year or two. And then later on in the year, we're looking at how we enter the extended stay, shorter term. It is through a part hotel, through a hotel. We're not sure yet.
So presumably for that 30-night plus market, that offers up more opportunities to you to apply to acquire standard residential stock, which with a tweak here and there is perfect for your needs.
100%, yeah. The problem at the moment, as I mentioned, the problem is cost of borrowing, right? So, when historically you in London specifically looking at already a high yield, which is what's difficult to get. Today, if your yield is around the same as your borrowing cost, so it's just difficult at the moment to make the numbers work. But this will ease out, and I think opportunities will rise.
Yeah, thanks, Thiago. Marie, back in the early days when you started looking at the sector, and even when we launched Service Department News 10 years or so ago, it was quite a regular thing that you would hear people don't quite understand what service departments are yet, and included in that would be investors, would be bankers, and also would be planners. But have we reached the stage now where planners are very happy with what a service department is and with what an apart hotel is?
I'm guessing Victoria might have a bit more experience of that than me. I think there is definitely more greater awareness of the product and the concept generally across the board. I think in some cases it's just sometimes luck of the draw with the planning officer. Typically it's based on the use class, it's C1, and it's like, well, it's a hotel really. Whereas, some planning officers, some local authorities might have specific views around, that more transient element of stay, but so they liken it more to a hotel. And to be fair, depending on the concept in question, it is very similar to a hotel, but of course there's others that operate with much longer average stays, and you could say actually from a planning perspective it should be seen more as a residential product. But it's a real mix, but I'm sure Victoria's got a bit more experience on that than I do.
Do you want to chip in on that quickly, Victoria?
Of course, it is still a bit of a minefield, because there's these clear definitions when you're looking at where you fit in that bracket, and we're looking at C1 and talking about that element of things, but there's definitely still a divide between planning understanding versus investor understanding. I think investors are now much more clued in as to actually the sustainability of the model and what that really drives, whereas planning is quite black and white, and it still sits on this cusp of, from their side, is it residential, is it not residential? And because we're so mixed use in how that approach is, it creates this real grey area that I still don't think we've really gotten from a planning side of people to really understand what it is that the product and the model does. Because you're a hotel, but you're not a hotel, and there isn't quite the clarity that we would like yet around that side of the industry.
Yeah, okay, thanks, Victoria. Marie, despite that lack of clarity, you could say that the kind of poster children for the sector over the last few years have been the branded apart hotels that have really caught people's imagination and grown quickly. I'm thinking, Lock, Wild by Stay City, and Roomzzz too, actually. How much of the new supply coming on do you think will be of this type compared with more traditional and longer stay service departments?
I think, well, what we're seeing is pretty much all branded C1 product. It's actually a much easier part of the market, to track in terms of pipeline, as opposed to, I think, the traditional service apartment sector. Usually, as Thiago was saying, it expands through, residential, acquiring sort of standard residential. So that's a much harder part of the market to look forward to see where the pipeline is. But yeah, what we're seeing is, everything within that C1 branded space, and obviously the economics in terms of, particularly when it comes to new supply, new development, is definitely skewing more towards the smaller apartments, but that's down to you know, land costs, bill costs, and actually just getting as much return as possible from the built product. But I don't think that's a challenge in terms of going to create any issues from a demand perspective or a consumer end experience, because in some ways having that brand, that USP, is actually what's helping, I think, to really boost consumer awareness and consumer demand for the product.
Yeah. And have you got an idea what, if the proportion of these branded apart hotels as a percentage of the entire hotel pipeline is doing? Is it becoming a bigger part of the entire hotel delivery?
Yeah, it did. I must admit, it's been a couple of months since I looked at the stats, and it does vary from market to market. So I think at one point it was running at about somewhere between 5 to 10% of pipeline, but that was quite a few months ago now. And in some markets it's more than that, and in others it's less. I think in terms of the geography, and this goes back to, I think it may be one of the questions actually, is where we see in a lot of activity is in sort of smaller markets in Europe, where the entry point is a bit is lower, less competition, your price point is lower. So actually we're seeing, new developments in, Stuttgart, Munich, Lisbon, markets which both have a corporate and leisure element. So I think that's a really interesting evolution in terms of where new supply is coming.
And following on from that, actually, we've got a question from Richard Majewski, who says it seems to him the traditional focus on big cities is moving to, well, he says smaller towns, but presumably, secondary and tertiary cities. So that kind of tallies with what you're seeing there as well.
Yeah. Still very important markets like a Stuttgart. I wouldn't say but they're just smaller markets, whereas initially it would have been like London, Paris, Dublin, whereas now it's getting a bit more mixed.
Yeah. Okay. Thanks, Marie. Thiago, going back to this kind of branded apart hotel model, you said that your initial focus is going to be for the longer stay, more corporate housing type thing, but are you looking to get into this sort of branded apart hotel space too?
Yeah, we are. I think what we are seeing and what we believe that where the market is going at the moment is going in a division, not a division, but it's getting more, in the US, a more split between the branded apart hotels and the really long stays. So I think we are splitting our business models on that model. I mean, you have, as much as Maria was saying, just adding to what she was saying in terms of all these branded apart hotels, big hotel chains, expanding. You also have a lot of new operators on the market, the likes of Blue Ground and others, who have thousands and thousands of units only for long stays, mid stays, right? So for monthly, 1 month, 3 months, 6 months. It's very difficult to track, as Maria says, right? So you have an operator coming out of, like, Blue Ground is great, but Germany and the US, new players adding 5,000 units into the market, for example, in Europe and things like that. So we believe that the market it's separating a bit. So whoever wants that longer stay, and there's a new demand for that as well, the so-called digital nomads and people that want to work from everywhere and all these things. It is true. It is there. The demand is there. So we are structuring our business to focus on both sides in separate, right? So we focus on that, and then the plan is to enter into the space later this year or next year with apart hotel. We are not exactly sure. That's the reality yet. So we want to enter into the short term, let's just say the short term segment, 3 nights to 5 nights to a week or something. So as we're going to focus so much more on the long stays on the other brands. So, I like a lot what, for example, Lock and a lot of other companies are doing, brands are doing, creating a community around it. And I was at the Hoxton Hotel the other day, you have the hotel, you have the co-working space, you have all the food and bar. So it's a lot combined. Sorry, it would be nice to be able to. We want to play in that space as well. We're just not haven't yet finalized our plans.
Yeah. Okay. Thanks, Thiago. Let's talk a bit about demand, where the levels are and where it's coming from. Victoria, how are you seeing things at the moment? Is demand fairly consistent at the moment? Because we are seeing quite a lot of economic factors affecting all areas of hospitality and real estate. How is that affecting your demand, and is it making the proportion of business travel to leisure travel, is that changing?
Yeah, absolutely. I would say we're definitely swinging to a more business-led mix in terms of that travel market. I think to touch on what's been said of kind of tertiary cities and the way that those kind of slightly smaller cities are being viewed in markets, we're definitely seeing leisure demand decrease in those higher rated leisure markets that traditionally now consumers are going to locations slightly further out that might be slightly cheaper, have a different offering. There's definitely an increase in demand on that side of things that is having an impact on what's going on. But we've also opened up to this whole new kind of target market that we haven't necessarily seen before, and that leisure blend of that kind of people that are now digital nomads and can work from home, and we're seeing it a lot of increased demand for those kind of products and things that are going on.
Is that affecting the physical product that you're looking to deliver? Presumably you have to offer people some sort of workspace, whether that's a dedicated co-working area in the building, or whether it's slightly bigger units with an area to work in there. Is that? Yeah,
definitely. I think something that actually helped us in the pandemic was that part of our brand standard is that all of our rooms do have a dedicated working area, which was something that, especially even from a corporate travel agent TMC side, became increasingly popular as a must for something that needed to be available in the rooms. So it's definitely something that's changing the scope of what we look at. We do, in a couple of our properties, already have co-working spaces. Our property in London has a dedicated co-working space, as well as a kind of deli area as well. So we're definitely looking at the options of what we can expand to continue to cater to that market as we look at new opportunities.
I'm quite intrigued by the digital nomad phenomenon, because it's come up in every conversation you have about real estate. In your experience, you said you have got an element of these people in your customer base. So how long do they typically come and stay for? I mean,
a couple of months is what we're really seeing at the moment, and we do have people that are working their way around our group, and I think some of the things that have come out in the markets, I mean, Citizen M have obviously launched their subscription model. You're seeing companies like Hyatt launch these kind of great relocation packages that are almost aimed at that kind of market as well, and it's becoming increasingly popular. People will pick an area of the country that they know they've got some business they might need to be in at some point, and they'll go and base themselves there for a couple of months. But I think that's really where the flexibility of our products has come to the forefront the last kind of 12-18 months, especially as people have returned to more normal working environments. But as they've been able to work from anywhere, it's really just increased their desire to not be tied into, when we compare ourselves to that kind of residential model, we're seeing much more flexibility from what we offer. Even people looking at things like tying into leases, no reference requests, and that's the kind of thing that gives them much more flexibility in their approach to life, which is what people want now.
Yeah. And you've also got a loyalty program. How is that driving demand? Is that proving popular?
Absolutely. I think that for us it's not so much a demand driver as it is looking at that focus of channel shift and really increasing the prevalence of booking on Roomzzz.com and the brand as a whole for us. It's definitely been instrumental for us in terms of moving over to a more corporate base and trying to shift some of that leisure away from the OTA markets and taking back a little bit of control. I think that's something that the pandemic really heightened for a lot of operators, was actually the need to control as much as your business as you can, just not even from a ring fencing point of view, but actually the communications you have with guests and the ability to have that clarity. When someone else owns the booking, you don't have that option. So we've really seen the benefit of that.
Yeah, okay, thank you. Thiago, Bill Gates famously said a couple of years ago that business travel will only ever come back to 50% of its previous levels. But anecdotally, I think he was being a tad pessimistic there. How are you gauging demand? Because you're looking at it both from an operator and an agent side, so you've got a good sort of 360 view on this.
Yeah, 100%. I think we never had that view, never shared our view with Bill Gates. Just so we're more optimistic. Demand for us is very strong. I think the corporate demand has come back stronger than before. I think from an agency point of view, which we can probably give you a better view, is it's just the same as it was before, in the sense of it goes with the industries as the industries goes. As you take the tech industry is doing phenomenally well. You couldn't find a room in Dublin last year for less than £500, right? And you couldn't even find a room. Now you can, finance sector goes well, and it goes depending a lot with, manufacturing, things like that. So we see demand growing in Latin America and not in Europe, and then sometimes in different cities. So it varies, but it was like that before, and it's exactly the same now. So I think it's that continues to be the same, and it will continue to be. Now I think what the difference is, what Victoria touched earlier, is this new demand. I think this is the interesting part. This is what intriguing us at the moment, is learning, is keeping track of this digital nomads, whatever you want to call it, right? And sometimes it's not even people wanting to travel to live 2 months here, 2 months in Paris, 2 months in Barcelona. It's people that want the flexibility, like Victoria said. I'm not sure if I'm going to be here for the next 2 years, so I might not tie myself into a contract, set the bills on my name, do all of this. So that you have quite a lot of that, and I think so. Yeah, it's the demand is here as it was before, depending on the market and the industry. But you have all this extra demand, which is obviously nice from one side, but that's why it's supply is a problem at the moment.
So it sounds like the new demand is coming from individuals who are booking directly with you, which on top of your traditional corporate business. What kind of patterns are you seeing in the traditional corporate demand? Are you seeing new clients coming on? Is there kind of length of stay changing? What trends are you seeing there?
So we have for our own clients and our operation in London, I mean, we always cater for the longer stays anyway. So honestly, for us, we haven't seen change, right? Because we have more demand that we can supply in our own apartments, and they tend to be relocations or projects. So it's the same. What we have seen, yes, is the demand for the individuals, as you said. And on the agency business, we also only cater for 30 plus nights anyway. So I haven't really seen, honestly, from our side, we don't have that experience of seeing different patterns, because we work in the same market as we did before. We just seen an increase of the individuals. This comes from, as I said, digital nomads. People want to live with flexibility, but also you see a lot of companies now giving employees the ability to book, right? So not being tied into big relocation programs or big programs. They get the money, they can book themselves. So I think there's a big shift there, and the interesting part, which is the intriguing part, is we do believe it's here to stay. We do believe it will increase, but we'll see how it play out in the next few years. Yeah. Thanks,
Thiago. Following on from that, Victoria, I've got a two-part question for you. I'm hearing a lot anecdotally that business travelers are taking fewer but longer trips. Is that something that you're seeing?
Yeah, absolutely. We're definitely seeing people traveling less and staying longer, without a doubt. Generally for us, that shift has been week to week corporate travel as we knew it before. This kind of your corporate rate grid is a Sunday to Thursday kind of thing isn't really working in the markets anymore, because people are looking for more flexibility in the way that they travel. And that's meant changes needed from a operator side to make sure that we're accommodating and catering to what this new set of travelers are really looking for. But we're definitely seeing that people are traveling once a month for 7, 8, 9 days rather than week to week in the same city every week.
Yeah. And the second part of the question is, Thiago mentioned there that he's seeing business travelers having an increasing amount of autonomy to book their own accommodation. Are you seeing that? And are there things that you need to do to you know, a tick list to fill to make yourself available to be on that list? Because presumably there are, you know, they can't just go and book anywhere. There are certain standards that have to be met for your accommodation to be booked.
Yeah, absolutely. I think we are seeing a lot more of customers coming direct to us with requirements, because so much more of what individual corporate travelers seem to be doing is more project led rather than that traditional model that we saw before. So there's definitely boxes you have to tick in terms of offering, but then also things you can do from an operator side to make it as smooth as possible. Even down to things like accessibility of rates. Are you allowing your corporate travelers to book their rates directly on your website? Are you removing the barriers to the way in which they book and travel? That is something that the Aparthotel service department market has been far behind hotels for a very long time. But I think we're finally kind of catching up with, even down to an agency side, direct connectivity of rates from an agency side is becoming more and more prevalent. More agencies are working with channel managers to ensure that that distribution network is as seamless as possible for everybody. The Aparthotel market and service departments used to work heavily on a request basis. So you could only book if you've physically spoken to someone on property that confirms availability and confirms a rate. I think we're finally starting to really switch to a much more open distribution model, which is making it easier for the corporate traveller to make that decision rather than almost needing the assistance of someone else to do it for them.
Yeah. And are you seeing your type of product being included more and more on TMC programs and on corporate travel buyers, you know, list of approved suppliers?
Absolutely. There's been a huge change. I think the barrier for a long time was getting on RFPs in the first place. I think there was a big kind of misconception that Aparthotels and service departments didn't give commission because it was a long stay model. There's this real mix of the requirements you need to fit into that RFP model. And there was this perception that service departments and Aparthotels couldn't meet those needs. But we definitely can, and we are seeing an increase. I think it was the GSAR report last year that showed that about 60% of agencies are seeing notable increases in their use of Aparthotels and service departments, and that it's becoming a much more requested need for their bookings. I think generally now we're seeing 12 to 15% of bookings coming through TMCs, which if we go back to 2018-19 was probably 3 or 4% realistically of how that business mix actually showed up. There are still going to continue to be barriers in just educating people about the flexibility of our product, and that actually we do have a lot more amenity and facility than the traditional corporate traveller thinks we can fulfill. But we're definitely making inroads to being included on those programs much more, and at least getting the RFPs and the opportunities to educate people about our brands.
I've heard more than one travel buyer say that they've had travellers come to them once they've stayed in the service department once. They will always request to stay in one again if one is available, you know, which is good news. Thiago, does what Victoria was saying tally with your experience that more travel programs are including service departments?
100%. Yeah, I think it is the case. I don't think it's the case for us because, as I said, we work on a mid-stay, and in the travel, the TMCs struggle to understand that. Well, and as much as we have connectivity, as Victoria said, you know, live availability and all of this, you know, when you request a 30-night stay, it's difficult. The TMCs struggle for that at the moment still. But I think, you know, we see for Aparthotels to be fully included there. There's no reason why not to, as Victoria said. I think booking a traditional corporate housing through the TMCs still proves difficult. Really don't know what is going to make that, you know, be different, to be honest with you. I think we believe, I think with the increase of the supply on the apart hotel and branded extended stay, etc., in Europe, UK, I don't think there is going to be needed actually for the TMCs to connect with a 10-unit residential block in the middle of Soho when there is a rooms right there, you know, with 80 units. So I think, as I said earlier, I think there's that division a little bit. So relocations will probably always be focused more into the traditional corporate housing, and they have more time. You know, normally relocations or projects are planned way ahead. They're more they consider other things, and the TMCs will be fully connectivity into you know, into the apart hotels and extended stays.
Yeah. Okay. Thanks, Thiago. Let's talk a bit about the next generations of consumers and where the demand is going to come from. So Gen Z, and a phrase I heard for the first time the other day, Gen A. We've actually gone around the alphabet and started again, apparently. A bit like car number plates. Marie, do you think that serviced apartments have any inherent advantages in that Gen Z in particular are really comfortable with the idea of booking apartments thanks to Airbnb and Vrbo and things that they do for their leisure travel? Do you think that will translate to booking patterns throughout their lives?
Yeah, I think so. And going back to, you know, the early points in terms of what was happening on sort of corporate, getting on the list for corporate travel lists is, I remember, this was pre-pandemic, someone at large corporate saying her challenge was that the employees were going, oh, there's Airbnb, I've stayed in Airbnbs, they're really great. I'm on this trip, I want to stay on an Airbnb. And she's like, no, you can't stay in an Airbnb, but you can stay in a serviced apartment. So it's, you know, that impact of Airbnb for corporates, as well as, you know, when we're talking about Gen Z and younger, I think it's just that familiarity of that product, and it, you know, benefits and feeds in very positively in terms of serviced apartments, apart hotels, as well as, I suppose, particularly for the more branded product where there is this sort of USP experience element really appeals to that younger consumer group. So again, real positive there. But even just on a cost basis as well, it's very appealing. You know, you and a couple of mates sharing a 2-bed apartment in Edinburgh, for example, is probably a lot cheaper and a lot nicer than staying in a sort of separate hotel rooms or you know, or a hostel potentially. So, you know, there's lots of sort of real positives, and I think, you know, younger consumers won't have the same barriers and issues around awareness of product that, you know, we're definitely made massive improvements around that, but I think it, you know, that as an issue for those younger consumers just won't exist going forward.
Yeah, thanks, Marie. Victoria, have you got any observations on the kind of younger end of your customer demographic and their behaviours? Have you got a significant Gen Z audience?
It's definitely changing, and social media is a huge part of that. It's now an essential part of any brand strategy to really kind of drive forward that social media use and engaging with that level of customer, which is really what is helping drive our brand awareness of our direct member offering, and engaging with those customers and getting control of that data. I think all of the changes that we've had on that side of things, and GDPR breaches, and what control you have over data, you have to be so careful now. So we've really had more opportunities to really engage with that customer base by getting them to come direct and understand the brand much more than that traditional kind of idea of how serviced apartments and apart hotels were viewed for such a long time. I think we haven't got that same stigma attached that the traditional traveller has.
Marketing to those people is quite a challenge, I think. I remember being in a queue at the airport of Valencia last summer, coming back from my holidays, and we were in a queue behind a couple who I'd say were in their early 20s, and they were both scrolling through Instagram and TikTok on their phones, and the attention span was, you know, to get their attention, you've got to grab their attention and keep it, you've got to make an impression in 2 or 3 seconds. That's how long they take to decide whether they want to look at something and watch it. How does that translate to your marketing activity?
I think we're doing much more now in short form video space than we've ever done before. It wasn't something that is a huge request for that side of things, but we're doing much more lifestyle photography and videography, and really trying to create things within our design. When we look at our latest product in Edinburgh, we've got a great penthouse suite, the Bonnie Suite, that we're launching an entirely new spectrum of what Roomzzz is, and what we can do with the creativity of the brand and the things that we're engaging with. Things that you have to think about now that you didn't. What's the best selfie spot from this room, and are we framing the room in the right way for it? Things that in a traditional service department apart hotel world was, well, my space is bigger, you've got a kitchen, you've got a fridge. That's not all you have to think about in that consumer sentiment anymore. There's so much more that you have to appeal to really engage to that Gen Z market that wasn't an issue 5 or 10 years ago with the kind of markets we were trying to engage with.
Yeah, yeah. It's fascinating and quite scary at the same time, I think.
Yeah.
We are coming towards the end of our hour, so let's move on to a couple of questions that have come in. Thiago, let's start with you on this one. Another one from Richard. He says, it seems to me it's definitely not just about leisure and corporate markets. There's also quite an undeveloped contractor market. What are your thoughts on that?
We work a lot with contractors, the market. I mean, we did more historically because of the type of product we had. I think there's a big contractor market there. I think there's an untapped residential market there. I think there's a lot of more demand out there than just the leisure and the corporate. I think he's absolutely right. I think just on what the point you were just talking now, you know, the younger generation and how they are getting into us so much younger, basically. You know, you can be 21, 22 and you're staying for 30 days, 60 days, 30, 90 days in an apartment. So, you know, I think there's certainly an untapped market for contractors, just normal residential. You know, you see the build to rent people that are now in shorter stays in a build to rent view. So yeah, it's quite an interesting learning curve for all of us right now in terms of this untapped demand, which is exciting at the same time, because there's, you know, we're already undersupplied right now, meaning if we can generate more demand, there's a lot of growth ahead. Yeah, yeah. One of the interesting things about the contractor market, particularly in the US over the pandemic, it pretty much drove the extended stay hotel market, because those guys didn't stop the whole way through. They carried on working. Does that form part of your customer base, Victoria?
Yeah, absolutely. It's always been a fairly bread and butter piece for us in terms of where that demand comes from, but not even necessarily just contractor. I think it's when the pieces they're working on, it's supply chain of those things as well that really drives that additional demand. And with things like that, especially anything project-based, I think that's a big pool of where a lot of the corporate market is coming from, is that project-based pieces of those isolated pieces of work that are happening. And we've seen it massively across the last 2 or 3 years in how that's driven demand for our properties.
Great stuff, thank you. We've got time for one more question. This is an interesting one, and I guess it borrows a bit from you know, models like Uber and Amazon, where everything is done with as minimum number of links in the chain as possible. So this question goes, does the panel think we will ever run the just-in-time model, where demand drives supply per requirement, furniture rental packages follow according to guest needs, a bit like some in the US? So basically, I guess that means you take on inventory to meet specific bits of demand, and then you let it go again when you don't need it. Thiago, is that something that you can see working?
It works still very well in the US. I don't think we don't particularly like that model here in Europe, right? It still works. I think as the supply increases on fixed inventory, I think that will decrease. But I think that, again, going back on the new generation, right? We need to catch up on how to make the bookings, how to make accessible in the Uber model, where you can touch on an app and you can, not Airbnb, proper corporate housing, right? And a lot of companies out there today, new companies, are already doing that. So I think I bet more on the fixed inventory growth with easier and direct access to be booked.
I'm just curious, why does that particular model, the just-in-time model, why does that work in the US and not so well here?
I think it's a historical thing. And look, historically, a company, take Citigroup, will come to a corporate housing company and say, I have a requirement. They will come and they'll get the apartment for 3 months furnished, and that's it. I think that chain will be broke. It is being broken at the moment. And eventually the guy who is literally moving to do the work for Citigroup, he is making the choice in his phone, on his phone, right? And that's, again, as the generations go, you know, I was talking to someone the other day, you know, in a few years' time, our kids won't watch 90 Days football anymore. They'll watch 3 minutes highlights, you know, and the younger generation that works in my office, they're all on their phones. There is no conversation. If you sit with 3 or 4 of them around the table, they will all be on their phone. There is no conversation on a lunchtime. So I think just the way people think today. So I think that chain about I'm going to my booker, the booker will send to the relocation to TMC, the TMC will send to that chain will be broken. And I think then the ability to go get the unit, furnish the unit, it will not be there anymore. They want to go on their phone, 1-2 clicks, pay, done. So I think it works in the US, but it is changing as well. If you take the major cities, it's changing.
Yeah, okay. Well, I hope those people have got the attention span to sit through an hour's webinar, because we're at the end. It's gone pretty quickly, I think. Hopefully there was some interesting stuff in there for the younger generation. Thanks, guys, for your input. That was really interesting. I'm just going to show a few slides before we finish. So the next Service Department News webinar is on the 20th of April, and that will be looking specifically at the luxury end of the market, a deeper dive into how that's faring at the moment. That's on the 20th of April, and the link to register for that is in the chat. Quick reminder that you've still got a week to get your entries in for the Service Department Awards. I think the deadline is midnight on the 30th of this month. And we will be having another fantastic awards ceremony on the 18th of May in London. Again, all the necessary links are in the chat. If you're interested in working with us, either on our Service Department News brand or on our other media brands, do get in touch with one of my colleagues, Katie or Steph, who you can see on the screen there. And again, their contact details are in the chat. And lastly, thanks for your time. Thanks for watching. Thanks to Marie, Victoria, and Thiago for their insights today. I think it was a really interesting session. Thanks to those who submitted questions. Thanks to you all for watching. And the session will be open for a couple of minutes so you can take some notes from all the info in the chat. And I'll see you on the next webinar. Thanks very much, everybody. Enjoy the rest of your day. Bye-bye.